Gold bounced back after the so-called Powell pivot last week. So let's go through the current fundamentals of gold and what the charts might be telling us. Gold burst back through $2,000 per ounce last week after the so-called Powell pivot. Effectively, US Federal Reserve Chairperson Jerome Powell at his press conference following last week's FOMC decision seemed to leave the door wide open to interest rate cuts next year. Now, markets had already been building in this direction in response to some dovish commentary from Powell as well as some other Fed speakers, along with a spate of weaker than expected US economic data, which started to suggest that maybe the US economy is slowing down. But really, it was fuel to the fire last week from the FOMC decision, with the Fed's so-called dot plots more or less confirming that the Fed is looking at around 75 basis points, or expecting potentially somewhere around 75 basis points of cuts next year in response to, well, lower than expected inflation, or forecast inflation that should fall quicker than expected. And really contrary from US Fed Chair Jerome Powell, that Fed Chairperson Jerome Powell, that rate cuts next year were actually discussed at the meeting, in particular what conditions would have to be met to see rates come down. So markets really took that message and ran with it. Now we've got 6 rate cuts being priced into the Fed funds futures curve. And as we know, the gold price is so sensitive to interest rate expectations and yields, not to mention the US dollar. It really did provide that boost for the gold price. So we've got the 10-year now below 4%. We have the US dollar index trading towards that 100 level. And all of these factors are lining up in such a way that supports gold prices. Now, we are still some way off the recent highs. We had that melt up a few weeks ago, which was really largely technical in nature. Some thin liquidity on a Monday morning, along with, again, those expectations for rate cuts, saw that really huge melt up in the gold price, which eventually reversed and saw gold briefly dip below $2,000 per ounce. But again, supported by that expectations for a dovish central bank, US Federal Reserve, in 2024, and the lower yields and the weak US dollar that has brought, all has aligned well, fundamentally speaking, for the gold price. Now, if you also look at some of the more technical elements of the price, in particular sentiment, futures positioning is still relatively neutral. And in fact, last week we saw a drop in long positioning in futures contracts, in gold futures contracts, suggesting that while there was some profit taking going on still throughout much of last week, and that there remains ample support of buyers potentially on the sidelines should we get any kind of boost to sentiment. Now, looking forward into 2024, it's going to be all about effectively the Fed coming to the table with interest rate cuts eventually, that sort of subsequent downward pressure on yields, and the weaker US dollar, at least in the short term, as the US economic outperformance is priced out, will be what continues to push gold possibly to retest new highs. Perhaps even a stronger tailwind will come if those rate cuts are accompanied or perhaps caused by a major economic slowdown, perhaps even a recession in the United States, which not only lowers yields, but also and boosts gold because of that kind of no yield kind of a relative appeal that comes about. But also because there will be very few alternatives in the market and very, very low risk appetite, which could create that safe haven bid for gold. So overall, the fundamentals are actually aligning reasonably well. Perhaps the big risk, however, is if, well, we do see some resilient economic data and maybe some pushback from members of the Fed about rate cuts. If some of those start to come out, or come out of the market, maybe that will cause some volatility, a lift in yields, a lift in the US dollar. It could reverse what has been this uptrend in gold prices. So let's look at some of the technical indicators now. And well, first of all, let's talk about the short-term trend. It seems skewed to the upside still, with a series of higher lows being carved out on the charts. Now, momentum does seem to be diminishing a little bit, but the daily RSI is still above 50, denoting positive momentum. And we do have the price above most key moving averages. Now, there are a few key levels to watch. In terms of support, we have seen buyers defend a support zone between 2005, 2010 US dollars per ounce. Even deeper than that, buyers seem to have emerged around that sort of 1975 to 1980 kind of support zone. So keep an eye out though for those. Any break below there would be a fairly bearish signal. However, to the upside, well, we're really going to be looking for any new high to be made and a consolidation above those levels too. Now, of course, the record high that the price did touch was well above $2,150 per ounce, but maybe we'll be looking a little bit more closely, at least in the short term, especially given that volatile intraday trading we saw a couple of weeks ago during that melt up, whether the market can push the price above the closing high for that day, which was around $2,070 per ounce. It might give some sort of a clue that we're getting a bit of a build up in momentum here and a market that is preparing itself for an extension of this uptrend. So that's the setup for gold going into the end of the year. And really what we'll be looking for in 2024, the power pivot has boosted the appeal for gold as yields fall and the dollar drops as well. The real risk is if that outcome does not come to fruition, that maybe we see some of these cuts priced out and subsequently the appeal for gold diminish a little bit. But nevertheless, as it stands now, the fundamentals, technicals as well, look pretty constructive for gold. And there's every chance that we may see a fresh record high for the yellow metal should we continue to see this kind of low rate power pivot narrative prevail in the market. But before we begin things, make sure you do follow us and like this video. Comment below too with your views on gold. We'll be sure to get back to you.